The message has always started with congratulations on your new role at Feed. So I'm really happy to have you on board, which makes it feel like maybe they're monitoring LinkedIn.
Typically speaking, from a fraud technology perspective, we've observed that the consumer part of the bank are the ones that are really driving the technology adoption. So they're the ones that have got the biggest bulk of the fraud in terms of volume, often the biggest liability position in terms of the losses for the bank. So therefore, they're the ones that are making the decisions. SMB almost are then told to say, hey, the consumer bank's made the decision. You guys need to go and use this technology that they've chosen to solve your own problems. But we're starting to see a bit of a backlash in the sense that the SMB guys are standing up now and saying, well, actually, my fraud's starting to look very, very different from the fraud that you experience at the consumer layer. Therefore, I actually need to make my own technology decision and not just be given the hand-me-downs from consumer. Is that a fair observation? And how do you see the kind of differences in the fraud types in consumer versus an SMB world?
It's definitely a fair reflection of what has previously happened in the industry. Obviously, fraud as a whole is a growing landscape. And previously, especially prior to the PSR and the CRM, etc., businesses were potentially a lot less likely to report fraud due to kind of reputational risk and the potential effect and implications it would have on insurance premiums and things like that. Whereas now, because it's being more talked about, SMBs are able to say, okay, we have been a victim of this type of fraud. The things that they're usually more subject to are kind of phishing attacks, CEO fraud, invoice fraud, and things like that. Whereas that's on a much lower scale in the consumer market. Purchase scams, romance scams, investment scams even.
Talk me through an invoice fraud. Like what's the risk that's presented there? Why is it specific to the SMB?
Sure, so invoice fraud is when a kind of phishing email almost will go to the business. They'll have an invoice that will just fall as part of their payment cycles. So it's easy to, especially in a bigger organization, to lose sight of what you're actually paying for and then just add it to the rest of your invoices or the rest of your accounts and things like that. And accounts are typically very far related from the company that, or the part of the company that is billing, for instance, and what they're billing for. So it's a fairly easy for fraudsters way into a company. And it could start as smaller amounts and build up to bigger amounts and things like that. But it's easy to get lost in a payment cycle.
So they're taking advantage of the disconnectedness within the business because the guys that might understand the risk and are responsible for the risk are perhaps not the guys that are actually processing the accounts.
Exactly. And seen such an increase in these that businesses are now starting to have a four eyes check on anything that's going into their payment cycles to make sure that they're not falling foul of invoice scams.
And what are the type of things that from a detection perspective, I guess there's two layers, right? There's how do you educate if you're the bank, how do you educate the business on how to look out for these things? But if you're the bank, what perhaps would be some of the things that you'd be looking for from an analytics perspective to perhaps detect when that type of fraud might be occurring?
For bigger businesses, they're usually assigned a relationship manager. For SMBs, that's not always the case. So the element of providing fraud education becomes almost even more important without that point of contact in the bank. And SMBs are really looking for that extra guidance as well. And it is becoming a differentiating factor between what bank they choose to bank with, especially with the emergence of newer challenger banks concentrating solely on the SMBs versus your traditional tier one bank. To your second point around the analytics, what we typically look for are changes in non monetary events. So, password changes, things that would indicate that there is somebody outside the company trying to get access, where access codes are usually written down, albeit not securely, but there are usually processes in place. So, anything that goes around that process is something that we'd look for. Bank loans being taken out is something that we see often in SMBs as well. Further to that, behavioral biometrics we can use to a degree, but the behavioral profile is often diluted in a way that it isn't for retail customers because you have so many different people and so many different profiles accessing the same device and the same accounts.
Yeah, you've got a many-to-one relationship in terms of the people that are using it versus the sets of credentials that you have to go in and make those things. That makes total sense. And you also mentioned CEO scams as well. Can you just perhaps talk us through what that means? Because again, I think this is one that's going to be less, it's going to resonate less with the consumer side, but certainly more with the business side. And I think you also had a personal experience of a CEO kind of email come into your inbox when you recently joined FeedZai as well, just showing kind of how quickly the fraudsters recognize these external changes and play on that, right?
Exactly. So to that point, about 4 weeks after I joined, I had, I think, in total of 3 emails coming from the CEO of FeedZai, albeit with completely different email addresses, asking for me to call them urgently, complete my onboarding. And the messages always started with, "Congratulations on your new role at FeedSci. Really happy to have you on board," which makes it feel like maybe they're monitoring LinkedIn. The kind of scope of these scams is huge. You don't know who's looking at what and what information they're using, and how convincing that can come across.
Yeah. And nobody wants to be the new employee in the company that disappoints the CEO, right? So there's that emotional state that comes into play as well.
Exactly. And albeit those weren't so sophisticated in the way they were executed, but there are obviously fraudsters out there that are using AI to replicate phone conversations, replicate voices, replicate kind of deep fake videos. Employees are being called on Zoom with a whole board of trustees or executive boards that are all deep fakes. We saw a really highly publicized case last year of the engineering firm Arup lose $20 million in a highly sophisticated CEO scam. So it's not just kind of SMBs that are potential victims to this, it's even bigger organizations that should have the controls or will now have the controls.
Yeah. It's a really interesting point around Gen AI really amplifying that risk, right? And essentially lowering the barrier of entry for fraudsters to be able to start to manipulate potential victims. And to your point around the sophistication in the case in Hong Kong, I mean, ultimately fraud's a business for fraudsters, right? You know, they ultimately want an ROI, just like we all want an ROI in what we're doing in our own kind of day-to-day lives. And it almost feels to me like the more research, the more interrogation of their potential victim, the more they understand their potential victim, what triggers are going to get them to respond, what language is going to get them to respond, what makes that individual feel good. The more they could understand that leading into the scam and then further enable that through the use of Gen AI, the more they're going to increase their chance of success within that particular attack, right?
Exactly. And then there's increasingly more information out there for them to harness to get into the minds of employees, etc. And with the emergence of kind of fraud as a service, there's more ability for them to generate AI deepfakes and then kind of sell them on to somebody for somebody else to use.
Yeah, so it almost feels to like the longer the research tail, the more the fraudster understands the victim in terms of what makes them tick, what language they're likely to respond to, the more likely they are when they amplify that with Gen AI to actually get the response, the emotive response, the reaction that they want, which ultimately facilitates the fraud.
There's so much increasing information about employees, about onboarding, that newer employees especially can fall foul of that. And with fraud as a service kind of really being a huge thing, especially this year, and with the rise of AI, um, it's increasingly likely that we will see fraudsters creating these deepfake images, creating these voices, and then kind of selling them on to the people that will actually use them.
And one of the things that occurred to me as you were speaking to, we talk a lot about Gen AI being used for harm. I think particularly with things like CEO scams, where you've got a clear line of communication between the fraudster and the potential victim. Often those CEO approaches come through form of WhatsApp or text, or in your case, email. I think was the channel of choice, right? We are starting to see the emergence of Gen AI being used to perhaps identify some of those kind of risks as well. So how can you take the content of the email, drop it into an LLM, build the right prompts around the LLM to say, hey, let me train you to spot when there's a potential CEO scam occurring because of the language that's being used, the way they're pressing for urgency, perhaps the type of item or the type of transactions that they're asking you to make. So I think hopefully we can start to balance it out with some positive uses of that AI capability as well as the downside. In the SMB world, it differs from the consumer world in the sense that on the authorized fraud side in particular, banks don't have that liability. That burden of the loss sits with the business. However, as we do move towards a world in certain parts of the world where the receiving side of the transaction is taking liability, so what that means is the Mule account, the one that receives the fraudulent funds from the sender, they're taking on liability in certain parts of the world due to regulation change. So what that means is that if you've got a sender or, let's say, a victim that is in scope for reimbursement and that money is sent to an SMB account, then that SMB does have 50% liability because they are the Mule in that situation. What are some of the best practices that you're seeing from a Mule prevention perspective? I know you've done a lot of work on inbound, so perhaps inbound monitoring is a good place to start.
Often when we talk about mules, we forget that there are unwitting mules, and these mules sometimes don't even come up until they're already compromised. And then you only know that they're compromised when the fraud is being perpetuated. So it may pass through the SMB bank account onto various other mule accounts, at which point, obviously, the SMB is liable potentially for that 50%. So that's where the inbound monitoring is increasingly important. So leveraging the inbound on the outbound, but then just looking at what kind of payments are coming in on the inbound. Not necessarily alerting either, but being able to profile these are the type of accounts that we can expect payments from. These are the type of amounts we can expect to come in. And anything outside of that scope, we can leverage either on the outbound or create an inbound strategy that will refer or disrupt any potential fraudulent payments.
And what are some of the things when we talk about inbound payment monitoring? What are some of the features or what are some of the flags within an inbound event that to you could suggest that there's risk here?
For SMBs particularly, anything out of kind of working hours or your batch payment hours, that would be a huge red flag. And then post that, creating kind of a profile of beneficiaries and receivers and senders, etc., increases your scope so hugely, especially across a large network, to say, right, well, we've never seen this sender in the entire network. This sender is a retail customer where this business only usually gets kind of B2B payments. And profiling payments that way is probably the biggest indicator of fraud versus genuine.
Yeah. And is it fair to say you can use that inbound not just as a way of overtly detecting the risk, but you can also use it in a way that's connected to the outbound. So you really kind of build up that full, I guess, that financial crime, that 360 view of user behavior, and one can influence the other and vice versa.
Exactly. And I think where that will hold the most value at the moment is reducing customer friction as well as the fraud detection, especially the new challenger banks that have come up for SMB banking. They typically overly cautious sometimes almost. And a lot of their customer feedback is, well, my account was suspended. I couldn't get through to anybody. I wasn't able to make these payments, which for smaller businesses is really their bread and butter. It leaves them in a position of financial instability sometimes.
One observation you made is that the the market for SMB banks is growing pretty quickly. So the big banks are accelerating what they have as an offering, but we're also seeing smaller banks come onto the market. And we typically associate neobanking with consumer banking, your Revolut, your Monzos, etc. But they now have their own SMB banking. We see others popping up that are dedicated fully to SMB. If you were a new bank coming to market, like what are the types of insights that you'd be looking for from what's already gone before to enable you to best protect the businesses that you bank from these kind of risks?
I'd be looking at what innovative fraud controls can you put in. So it's fine for businesses to have that 4-eye check. How can I implement that within the banking journey? That there is a 4-eye check on larger payments. How can I influence the businesses to reduce their payment thresholds, to perhaps create kind of guardrails to ensure that all employees are abiding by the certain process? How can we make that customizable and dynamic that businesses can kind of go back to the bank and say, this is our banking behavior, this is our profile. Anything outside of this is something that we don't necessarily do. So it is definitely having that dynamic touch because, again, SMBs, the scope is so broad. Over 85% of businesses in the UK can be classed as SMBs.
Yeah, so it gives you that as a business within that bank, it gives you a sense of, this is how I want to set up security from my perspective. So you kind of get that nice blend of, all right, these are the kind of overt or the blunt instrument controls I'm going to put in. I don't want payments to be made between these hours. I don't want anything to be made that's more than this without it coming for sign off over here. And you combine that with what the banks do from a, let's say, a covert perspective, all the things that go on under the hood that the SMB perhaps doesn't know about. Some of the things you mentioned, like behavior, like device, it's about empowering the business to take control of their own security outcomes and combine that with what the banks do themselves and what we know they can do from a technology perspective.
And that kind of working time hours works in theory. However, obviously, with batch payments still being such a large proportion of SMB payments, until that's kind of crossed over to the real time realm, which I do think is in the future, in the near future, as they catch up with kind of consumer banking, then it will foster a larger use case for banks to be able to implement some of that more dynamic strategy.